4.2. Reconciliation of statements received from creditors with ledger account in creditors ledger to prepare creditors reconciliation statements. The business opens a separate account for every creditor in the creditors ledger. All transactions regarding creditors are recorded in the subsidiary journals and are posted to the personal accounts of the creditors on the date of the transaction to calculate the amount that the business owes the creditor at the end of the month. Remember that a creditor is a liability to the business, which means increases are shown on the credit side and decreases on the debit side of the creditor's account. So creditors ledger of the entity, you minus on the debit side, that will be all repayments, discount received and returns. You add on the credit side, that is more additional credit purchases, payments that have been cancelled, or if we are levied with interest for paying late, and then our balance, the credit balance owed to the creditor according to the entity. The creditors will create a separate personal account for the business in their debtors ledger, where they will record all transactions that took place between them and the business to calculate the amount that the business owes them according to their bookkeeping process. At the end of every month, the business will receive a statement from the creditor. The account statement is the account shown for the business in the debtors ledger of the creditor. It reflects all credit transactions concerning the business of which the creditor is aware. It is important to understand that the business is seen as a debtor and therefore an asset by the creditor. All payments or returns made by the business will decrease the amount owed to the creditor and will be credited on the statement. Should the business buy more on credit, a payment has been cancelled, or the creditor has charged interest, it will result in the business owing more to the creditor and the amount will be debited on the statement received. Account statement in the debtors ledger of the creditor. Debits will be all credit purchases, cancelled payments and interest received. Credits will be your minuses, will be all repayments, discount received and returns. Balance is the debit balance owed by the entity according to the creditor. Every month it can happen that there will be some transactions that the business did not enter and that the business has already recorded in their creditors ledger, but of which the creditor is unaware. For example, EFT payments that do not reflect on the creditor's bank statement yet, or returns made not yet received or authorized by the creditor. There can also be transactions concerning the business which appears on the account statement which have not yet been recorded by the business in their creditors ledger, for example, interest charged by the creditor or other increases or decreases of which the business was not aware. It can further be the case that the creditor made some mistakes on the statement. For example, an invoice issued to another company was wrongly added to the statement of the business, or discount was omitted by mistake. In short, at the end of the month, the balance of the personal account of the creditor in the creditors ledger of the business will differ from the statement received from the creditor because of transactions that have not been recorded in the records of both parties and because of errors made by one of the parties. 4.2.1 Creditors reconciliation process. At the end of every month, the reasons for the difference between the balance of the personal account of the creditor in the creditor's ledger of the business and the balance of the statement must be sought and entries must be made to rectify it or to explain the reasons for the difference. If the account statement shows any amounts with which the creditor has already increased or decreased, the account of the business, but which the business only sees when receiving the account statement, the entries for these increases and decreases can merely be made in the personal account of the creditor in the creditor's ledger of the business, as well as in the subsidiary journals, so that the transactions are reflected in the financial records of both parties. Should it appear from the statement that the business has made an incorrect entry or an error in one of the subsidiary journals, for example, an amount was recorded as more or as less than the actual amount, this error can be corrected by immediately making an entry in the general journal to correct the mistake. The business can thus immediately make entries in their records for these increases, decreases, or the rectifying of errors to calculate the correct balance of the creditor's account. Since creditors' statements are usually only issued at the end of every month, it will not be possible to check any corrections and additions that should have been made by the creditor immediately, and therefore another process must be followed. The business will have to record transactions that have already been entered into their records and which have already increased or decreased the balance of the creditor's account, but which have not yet been recorded on the creditor's statement, or errors that might have occurred on the statement in such a way that it can be monitored when they receive the statement from the creditor at the end of the following month. Towards this purpose, the business will for this purpose prepare a statement called the Creditor's Reconciliation Statement. The Creditor's Reconciliation Statement consists of all invoices and EFTs or debit notes which have already been recorded as increases or decreases on their balance for the creditor in the creditor's ledger, but which have not yet been recorded by the creditor, as well as entries that the creditor might have made. The creditor's reconciliation statement must be compared with the statement received at the end of the following month to check if the necessary entries for the increases and decreases which were not depicted on the last statement have been done, as well as if the errors that the creditor made on the last statement have been corrected. Creditor's reconciliation statement of Zen stores with XY traders on 31 March. So you will have a debit and credit column. You will always start with your balance according to account statement. Then you will credit EFTs not yet recorded, and you will debit invoices not yet recorded. You will credit discounts submitted, credit amounts incorrectly debited, debit amounts incorrectly credited, and then you will have whatever balance according to your ledger account. Again, your debit and credit balances totals must be the same on either side. 4.2.2. Comparison of the account statement of the current month with the creditor's reconciliation statement of the previous month. A creditor's reconciliation statement is prepared so that it can be compared to the following month's statement to monitor whether the creditor has indeed recorded outstanding invoices and EFTs, and if errors that occurred on the previous month's statement have been corrected. If the creditor's reconciliation statement of the previous month is given, it must first be compared with the current month's account statement to check if outstanding invoices have been added, EFTs that had not been recorded have been deducted as well, and if all errors made by the creditor have been corrected. If any of these have not been done, the creditor must be contacted immediately and asked for an explanation. 4.2.3. Outstanding invoices or credit notes. Whenever items are purchased on credit, the business will immediately credit the amount of the invoice to the personal account of the creditor in the creditor's ledger. And when items are returned, the amount will immediately be debited against the personal account of the creditor. Account statements are normally compiled by creditors before the last day of the month. It can therefore happen that purchases or returns took place after the statement had already been compiled by the creditor. This will have the effect of these transactions already being recorded in the records of the business, but not yet added or deducted by the creditor. The creditor will only show entries for those transactions on the statement of the following month. Entries need to be made on the creditor's reconciliation statement to remind the business to check the following month's statement to see whether the invoices have in fact been added and the returns deducted. 4.2.4. Outstanding payments. Whenever electronic payments are made via EFT, the business immediately makes an entry in the cash payments journal and immediately decreases the balance of the creditor in the creditor's ledger. It can happen that the EFT does not appear on the bank statement of the creditor, or that the payment was made after the account statement had already been prepared. This will have the effect that the payment has already been recorded in the records of the business but has not yet been deducted by the creditor. The creditor will only show the entry for the payment on the statement the following month. An entry must be made on the creditor's reconciliation statement to remind the business to monitor the following month's statement to see whether the payment has in fact been deducted. 4.2.5. Discount not recorded. When a credit transaction takes place, the parties will agree on the terms of the settlement as well as on discount to be allowed if payment is made before a set date. If the business adheres to these terms and knows that it is entitled to the discount, the business will already have taken the discount into account when making a payment for the outstanding balance. It often happens that a creditor forgets to take the discount into consideration. This will have the effect that the discount was already deducted in the records of the business but not yet been deducted by the creditor. The creditor will only show the entry for the discount on the statement of the following month. An entry must be made on the creditor's reconciliation statement to remind the business to monitor the following month's statement to see whether the amount of the discount had in fact been recorded. 4.2.6. Correction of errors and omissions. Whenever an error has been made by the entity while recording an amount in one of the subsidiary journals, whereby an amount was entered as too much or too little, it must be corrected immediately. Entries to the correct errors are usually made in the general journal and are posted immediately to the personal account of the creditor. However, if the error was made by the creditor on the account statement, the creditor will only correct it on the following month's statement. An entry must be made as follows on the creditor's reconciliation statement so that it can be checked on the statement if the correction has indeed been made. If the creditor incorrectly added an amount on the account statement or shown an invoice as too much or a payment as too little, the entry credit amount incorrectly debited must be shown on the creditor's reconciliation statement to check if the decrease has been done correctly on the following month's account statement. If the creditor incorrectly deducted an amount on the account statement or shown an invoice as too little or a payment as too much, the entry debit amount incorrectly credited must be shown on the creditor's recon statement to check if the increase has been done correctly on the following month's bank statement. Example 3. The following information relates to Brooklyn Traders on 31 May 2025. Required 3.1. Explain why it is important to prepare a creditor's reconciliation statement every month. 3.2. Compare the statement received from a creditor, Perry Stores, with a personal account in the creditor's ledger of Brooklyn Traders. 3.2.1. Prepare the personal account of Perry Stores in the creditor's ledger of Brooklyn Traders by recording changes and showing corrections clearly. The account must start with the incorrect balance. 3.2.2. Prepare the creditor's reconciliation statement on 31 May 2025. Explain why it is important to prepare a creditor's reconciliation statement every month. It improves internal controls and prevents fraud, as each individual creditor's account can be compared with an external source via the account statement received from the creditor. This explains the differences between the balances and ensures that correction of errors and omissions can be checked against the latest account statements. Creditors can also be contacted on time if errors on account statements have been detected so that corrections can be made before credit limits are reached or interest is charged on overdue accounts. Now we are going to complete the creditor's ledger and the creditor's reconciliation statement by reading additional information 1, 2, and 3. And as I read the information, we are going to put it onto our answer sheet. So have your question paper in front of you and your answer sheet. And as I read 3A, we're going to either correct it in the ledger or in the statement. The first step is to go enter our opening balance for our creditors ledger, which we will know will be our incorrect balance. And then we're also going to go enter our balance in our creditors reconciliation statement. So if you go to additional information number 2, you will see that your creditors ledger of Brooklyn Traders ends with a balance of 37,000. We know that this is an incorrect balance because of errors and omissions that would have taken place that we need to fix. So under 3.2.1, you're going to write incorrect balance under details, and then we are going to transfer our 37,000 balance so long. Then if you go to your creditors reconciliation statement, you will see the account statement for Brooklyn Traders on 28 May ended with a balance of 45,000. It's a positive balance, so it's a debit balance. So now you're going to write debit balance according to account statement, 45,000. So that is the first step, is to enter our balances. Now we need to compare our account statement to our individual creditors ledger and see where omissions and errors took place by reading additional information 3A to G, and then rectify it either in the ledger or in the account statement. So let's read 3A. Invoice 442 regarding inventory that was purchased on the 3rd of May for 9,500 Rand was recorded incorrectly as 5,900 Rand by Brooklyn Traders in their creditors ledger. So where did the error occur? The error occurred in the creditors ledger, so we need to go fix our creditors ledger. So we are going to say invoice 442 corrected. It will involve a calculation. 9,500 Rand minus 5,900 Rand gives us a difference of 3,600 Rand in the credit column. We purchased for 9,500, but we accidentally only recorded it as 5,900. So our creditors ledger needs to increase with that difference. That's why it goes in the credit column. That's now A completed. Let's go read number B. Brooklyn Traders were entitled to a discount of 2,200 Rand on the payment made on the 12th of May because they had terms of 30 days. Perry Stores omitted the discount from the statement and will only consider it on the statement issued for June. So now we have to ask ourselves, the error did not take place in the ledger. It took place by the business that forgot to put it in the statement. They forgot to enter this discount. So we need to go remind them in the creditors recon statement. So under our creditors recon statement, we're going to say credit discount omitted. And in the credit column, we are going to put 2,200 Rand. Then number C. Credit note 533 on 18 May was incorrectly credited by Perry Stores on the statement of Brooklyn Traders. The goods were returned by another business. Now once again, the error took place by the business. If the business made the mistake, Perry Stores will fix it in the creditors recon statement. So we're going to go to the creditors recon statement of Brooklyn Stores, Traders with Perry Stores, and we are going to say debit faulty credit note, and the credit note was number 533, 1,600 Rand in the debit column. So we are reminding ourselves to go and fix this error. Then number D, invoice 449 on the 22nd of May was an error by Perry Stores on the account. The inventory was sold to Brooklyn suppliers and not to Brooklyn traders. So once again, we have to go to our creditors reconciliation statement. We are going to say credit faulty invoice 449. And in the credit column, we are going to put 8180. If you do not know where I got this amount from, if you go to invoice 449 under your account statement, additional information number 1 on the 22nd, it says duplicate invoice 449 8180. So that's where we get this amount of 8180. It's a credit faulty invoice. We need to go put it in our credit reconciliation statement under the credit column. Then number E. Invoice 109 on 23 May was an error made by Brooklyn traders in their creditors ledger. The goods were not bought from Perry stores. So now the error took place in the creditors ledger. So we're going to go to our creditors ledger. We're going to say debit faulty invoice 109. Okay, just to remind you, before we put this entry in, I never entered the balance now. We started with a balance of 37,000. I now add a credit of 3,600, so my balance will increase to 40,600 because of our general journal transaction. We had to go and correct invoice 442. Then referring back now to adjustment number E, I've got a debit, the faulty invoice 109 that was renumbered. Again, it's going to be a general journal transaction. It will be 5990 in the debit column. And now my balance is slightly less. It's 34,610. And if you're not sure where I got the 5990 amount from, again, if you go to additional information number 2, under your creditors ledger, you will see invoice 109 renumbered on the 23rd, and that invoice was for 5990. Now let's go have a look at adjustment number F. Trade discount of 10% was authorized on the goods bought on 27 May. So if you go to the 27th of May, under additional information number 1, you will see that it was 9,200 Rand was the purchase price. Now, no error took place with the purchase of the goods. That is all correct. But then, however, the discount was not considered. So we are going to go to our creditors recon statement, and we are going to say credit trade discount omitted, and we are going to perform a calculation. A 10% discount was authorized, so we are going to say 9,200 Rand times 10% gives you 920 Rand. So we are going to credit 920 Rand, the discount that was omitted. Then the last entry, entry G, all other entries on the statement as well as the creditors ledger are correct. So now we just have to go enter the entries, go back to our two statements given to us, our account statement as well as our creditors ledger, and now quickly see which entries have not yet been recorded, and then we can put it into our answer sheet. So if you go to additional information number 1, you will see that there is, on the 28th, interest on overdue accounts. So obviously the statement was sent out before we could enter the interest on the overdue account. So you're now going to say interest on overdue account. It's a general journal transaction, and it is 1590 on the credit column. Interest will make our liability go up because we forgot to pay on time, so now we have to pay more. So now our balance at the end of the month is 36,200 Rand. This is the balance that will go to my creditors reconciliation statement. It will be a credit balance according to my creditors ledger. So I'm quickly going to enter that Since I've calculated it, you're going to say in your creditors reconciliation statement, right at the bottom, credit balance according to creditors ledger, 36,200 Rand. It is this end balance of my creditors ledger that I've just calculated that I'm now transferring to my creditors reconciliation statement on 31 May. Then if you go back to your creditors ledger and the additional information number 2, you will see that there is 2 entries that have not been recorded yet. The dates are the 29th and the 30th. The first one is for invoice 119. So you're going to say debit invoice 119 after statement date received. And it's for 3772. And then you're also going to say credit debit note 145 after account statement date. And the amount is 2872 in the credit column. So it's just those 2 entries, the invoice of 119 and the debit note of 145 that we did not enter, which we must now quickly record. Now that we've put all the additional information into our 2 answer sheets, which was the creditors ledger and the creditors reconciliation statement, the last step is to add up our debit and credit column of our creditors reconciliation statement to make sure that they are in balance. And if you add up the debit column, you get a total of 5372. If you add up the credit column, you also get a total of 5372. So now our creditors reconciliation process that we have just followed is in balance.